Imagine you're 18 days from closing on your dream home, and then the loan officer calls you and tells you no longer qualify. It actually happens more than you think, usually because of one lazy mistake. This is the problem. We want the easy path. So I go in, put my application online, and I put in my income that I'm paid this much money a month. The mistake that happens, unless you are paid a $160,000 salary with no RSUs, no variable income, it's probable that your income needs deeper analysis. What do I mean by that? If you're paid hourly, variable income such as bonuses, commissions, shift differential, self-employed, you have rental income. I could just keep going with this list because it applies to most people. You got that pre-approval letter, you went shopping, the lender said you're fine, and now there's a problem right before closing. This causes a lot of anxiety, stress. It causes problems trying to navigate what's going to actually happen with the closing. And all because we wanted the easy button. So the most important thing here is if you have variable income, bring it up. Why do I say you should bring it up? Sorry to say, but the average loan officer is not going to dig in. They're just going to be excited to have a client to issue a pre-approval letter so that they can close a deal. That's just the reality of the industry that I work in, guys. If you have variable income, here's the path that a good lender will take. They'll get your year to date. They'll get the end of year, the last year. They may even get the end of year pay stub from the year before. Why pay stubs over W-2s? Simply put, a W-2 is your total earnings. The pay stub breaks apart all those variable components of the earnings. That is why the end of year pay stubs matter. And that's how you get to the closing table without issue. Other situations that can arise can relate to assets. If you're converting a house to a rental property, these are all things that I hear or just heard yesterday about an agent saying the closing was delayed because they needed the lease, the security deposit, the bank statement showing the rental income was coming in. And my response to him was, that should have been solved for from the beginning because that's a standard Fannie Mae guideline. This is going to be asked for by the underwriter. That's not the underwriter delaying the closing, guys. That's a loan officer taking the easy path, not knowing the right questions. And I got stories I could just keep telling you about these situations when we get calls from people that have gone through these pain points or agents that experience it. Be mindful, be careful out there. Don't find yourself panicking 18 days before closing. Make sure the lender is vetting your scenario. Whether it's income, assets, converting a property to a rental, your new job, your tax returns, make sure that they are vetting it upfront. Check out other videos on the channel related to building wealth through real estate. You can always schedule a consultation, kelly.com/mortgage maestro, so that you can get answers to your questions